Hey everyone, it's Lee Goldstein, the trading director at 10 Minute Trades. I want to welcome you to the weekly 10 Minute Trades podcast. This is episode 21, and this week we've got a recap of April 17th through the 22nd, the year 2022. Okay, relax, sit back, and let's get started. I'll show you what went on this week. Overall, a very profitable week. If you take all of our opening trades, we're now doing the NQ Open, the Oil Open, and sometimes the Gold Open if there's news before the Gold Open. All of our opening trades were profitable for the week, in spite of some of the crazy trading that I did this week. And if you were in the room, you saw me. Monday, took some bad signals with Tick Strike and got into some foolish trades, and I did some bad trading on Thursday. I just wasn't patient. And everybody makes mistakes, even professional traders. You want to be patient. But overall, especially ending Friday with two great winners, the crude oil trailing opening trade and a very nice NQ trade for the open, made for an extremely profitable week on the open. So get into the trade room and make sure you learn these setups so you know how to do it. The rest of the week was quite interesting. Building permits and housing starts on Tuesday. That was a daily market report that wasn't quite up to snuff for these volatile markets. Very good trade management turned a potential loser into a small winner. So I was able to move my stop real fast after it hit my first target, after being filled early. Nothing went right on that trade, but we were able to save it and made a couple of dollars instead of it being a loser. Then we had the API crude oil report, which, as you know, if you're watching my podcasts, API has not been trading well for the past couple of months, but it was kind of due for at least a profitable move, and that's about what we had. You could grab about 4 to 8 ticks on the API report. The big news of the day really was the first earnings play, Netflix. Netflix, over the years, it's not been the easiest earnings trade. This week, we had a great new setup. I did a lot of extra testing. Netflix was a fantastic winner. Easy $600, 615 to be exact. Couple of seconds in the market, excellent trade. So Netflix started off the earnings season with a great winner. Wednesday, we had Canada Core CPI and a very decent move. That report is doing better. That was a profitable trade. Then we had existing home sales in the same room with crude oil earnings. Crude oil storage. The existing home trade was a very small trap trade, which didn't really do much of anything. But the breakout, as based on the standard DMM, if you were patient and stayed in the trade for a minute or so, you could have had a very nice winning trade. So existing homes, it's not a big impact trade, but it's been trading not too badly over the past 6 months. It was potentially a winner if you traded it. Now we got to crude oil. Crude oil has been trading actually quite well over the past 8 weeks or so. Did a double whipsaw, stopped me out on the micro. It was a miserable trade. Crude oil didn't work. The 20-year bond report, we're using the same technique that we used in the 10-year, where we take our software and use the break-even trigger ticks, which tells you how many ticks to go in the market until you move your stop. So if break-even trigger ticks is 20, stop goes to break even. And then you could use profit ticks, break even profit ticks. If you put a value in that input, say 10, instead of moving you to break even, it'll move your stop to break even plus 10. So what's the point of that confusing, mess of jargon? And it's not confusing when you come in the trade room and see how we do it. But if you're not watching, you're not watching in a podcast, you're just listening, it sounds confusing. But the truth is, it very simply does this. It lets you trade one contract and it can move the stop in an auto trailing fashion so that you can have a larger move without having to guess what your first target can be. So it's a very nice way to trade the bonds. We had a winning trade, which I completely nullified with a ridiculous mistake that I made on our alternate additional gold setup on the same bond trade. I accidentally traded 8 contracts of micro gold. That trade didn't work. It destroyed my whole profit. So unfortunately, I wound up losing $10 on the 20-year bond report. Look, even professional traders make mistakes. You pick yourself up. It's embarrassing for me because I'm in the room with people. They're watching me act like a fool, and it's frustrating. But everybody knows me. I generally don't make that many mistakes. I'm happy to say that. And when you do make one, even if you're home in your office alone, don't let it bother you. Just move on to the next trade. Pay attention. That's all. Now, Beige Book was our last event on Wednesday. I actually expected a much bigger move than we got. There really wasn't much of a tradable move at the moment of the report. It was a 2 p.m. report Eastern time. But what we noticed is that if you hung around the Beige Book market in the NQ, you had a great potential for a couple of moves within 15 minutes of the report. So we'll stay around longer for Beige Book, particularly when there isn't an initial move on the report. Thursday's unemployment numbers with Philly Fed was an excellent range trade. That was a winner without a doubt. Natural gas, if you took the natural gas trade, it was a beautiful winner. Excellent trade. And then Friday morning, if you got up for a 3:15 in the morning Euro trade, I call them, the French Flash Services Manufacturing PMI, that was at 3:15 a.m. That was a beautiful winner with the Euro. The German version at 3:30 unfortunately didn't work. It probably wouldn't have nullified all your profit on the first trade because there was a nice profit on the first trade. But the German version of the same exact trade did not work. And then on Friday, we also had as I said before, the NQ Open and the Oil Open were both excellent trades. And then Flash Manufacturing Services, PMI, another mouthful. It's a 9:45 trade, U.S. market trade. And the trap trade with gold is working beautifully on that setup. We're going to go forward live next month on that trade. I also tested an NQ breakout trade, and it did not really have a good outcome. So the trap trade is the way to do it. Definitely, that's what we're leaning towards. Now, I want to just touch upon earnings for a second. I'm sure you know how much time and effort we put into this earnings workshops and trades, and there's been a significant schedule change. Google and Microsoft are trading together on Tuesday, the 26th. Facebook is trading alone on Wednesday. Amazon and Intel on Thursday. Apple by itself later on Thursday. So it is something we know can happen. It happens a lot. The earnings schedules change. There will be less rooms, but we will make sure there's more education, and we're also going to include software with the earnings trades. 1 month of free software, sort of as a way to say, hey, look, we're sorry, we didn't realize the trades were going to, the earnings were going to be a little bit less in the way of trade rooms, but I promise you, you're going to get an over delivery from me on quality of the education. So come join us, www.tradeearningsnow.com. Get the earnings workshop package. The workshop class will disappear tomorrow. We did a whole workshop last quarter that we're including in this deal, in this offer, but that goes away tomorrow. So sign up before that goes away. That's a $500 class. It's a great class on learning how to trade earnings. So folks, thanks so much for watching my podcast. Make sure you find your way over to tradeearningsnow.com, www, of course. And I appreciate so much all the nice comments on the podcast. And I'll see everybody in the trade room next week. Have a great weekend. I'm Lee Goldstein, the trading director. See you soon.